Good evening once again. I hope our day went well. So, first thing first, my assignments. If you did the assignment, kind of and just raise up your hand if you did the assignment. Let me see your hands up. Nobody did the assignment. I cannot see any hands up. That's very bad, Sha. I think somebody came to my DM with an assignment. I just don't know whether it's your class or professional class because I have not been able to check through the person's work. If you guys did not do my assignment, it means that you guys are not interested in the question. I'm not in the habit of solving questions that students did not attempt. If you don't attempt it, it means you're not interested in it. So I guess number 2 was your assignment, if I can remember. Was it number 2? Can somebody remind me? Is the assignment number 2 or practice question 1? That's I don't.
Question 3 and under illustration question 2.
Okay. Practice question 3. Okay. So did nobody attempt the assignment? Seriously, nobody attempted the assignment. Oh my God, this is very bad. This is very, very bad. If this was like a physical class, you guys do the assignment like right now, currently. If you don't attempt assignments, there's no way you can evaluate yourself. At least that is where you know the things that you understand and the things that you actually don't understand. If I'm talking to you guys, it seems simple and you feel like I understand until you try to do it by yourself. That's when you can actually tell if you understand it or not. And that practice question theory is so important. You did the assignment and send it to the group. I did not see it. So I did not see it. I was asking if anybody did the assignment and they should raise up their hands. I did not see anybody's hands up. So apart from let me see the person's name. Apart from Adeolu that did the assignment, who else did the assignment? Adeolu, let me see. Let us start with practice question 2. Did you do the 2 or did you just do one of the 2? So for practice question, okay, let's talk about illustration 2. Both. Nice. Well done. Thank you. So, nice. That's good. I like that. So you attempted both. What is the requirement? Compute total tax liability for the relevant years of assessment and explain other basis. Okay. So for number 1, that this 2A, what is your answer? Just type your answer in the chat box. So when we do it, you can compare, then we can see where your mistake is, and now you can ensure that you don't make that mistake again. So because of Adielu that attempted this assignment, I will do it. Sorry. I will do the assignment because that practice question 3 is even very important. It's very, very important. I wanted to ensure you guys try it first before I do it for you, but there's nothing I can do. You guys refuse to try the questions. All right, so let's start with illustration 2, which is Wazobia, right? Wazobia, I wrote XYZ. In this place, I wrote Wazobia. I don't Nigeria Limited. So we want to compute tax liability. Computation of tax liability was in plural form. For the relevant years of assessment. Like I said before, if you're not sure about the years of assessment, just write relevant years of assessment, please. Don't go and write the wrong thing there. Oh. It's better to write this relevant years of assessment than writing the wrong thing. So we're doing company income tax 2. Company so, okay, now let's go back. If you notice this question too, it's quite long, and if you're the type that you get scared by long questions, it might scare you, right? It's like almost, I think, more than 2 pages or like 2 pages. Right? So one thing I'll tell you about taxation is that tax have long questions, but I tell you, it does not mean that the question is hard. You just need to calm down and check through what exactly are you required to do and what are the information given to you to actually achieve that requirement. Because if you get to professional, you can see number one question that will be like 5 pages. So if you now see question of 5 pages, you're actually going to get scared. You are going to get scared. But I tell you, those questions are usually very simple. But when people are already scared of the question, it messes up with the ability to think deeply and resonate with things that they already know in the question. So I would advise you to just always calm down whenever you want to check through what tax question, no matter how lengthy it is. In fact, I see lengthy questions as like that length is just to intentionally distract somebody because they are usually very simple. Hmm? Yeah, so let's continue. So Wazobia Nigeria Limited was incorporated on November 1st, 2016. That 2016, okay, yeah. The company has an authorized and fully paid ordinary share capital of 5 million shares at 1 naira each. The company is an entity that started trading on January 1, 2023, retailing engineering equipment. Its first statement of profit or loss was for the year ended December 1st, 2023, and revealed the following information. Please note, it was incorporated in 2016, but started trading in what, 2023. We, as usual, we ignore this. So this is just a noise making factor. This is what is important to you. So now, for that first year, they had the following results. You can see their investment income, profit and sales of equipment, blah blah blah. You go through it, right? Net profit for the year. Then we have additional information. Retailership. Okay. Um. So we have everything. On December, the director of the company agreed to pay 5% dividend, balancing charge, capital allowance required, compute total tax liability for the relevant year of assessment. Now, everybody in the tax box, what is the relevant year of assessment for this company? And now I told you that if you don't know it, don't write it. But I expect that this question is straightforward, and I don't see any reason why you will not know the relevant year of assessment. For this question, what is the relevant year of assessment for Wazobia Nigeria Limited? Oh yeah, in like 1 minute. All right, thank you, Adeolu. When we are through, we'll see whether you're correct or not. So what is the relevant years of assessment, my people? 2024,
2024. 2024.
2024. Okay. So if you want to put the relevant year of assessment in the it's going to be computation of tax liability for 2024 year, not years. So in fact, this one is supposed to be year because it's just 1 year. 2024 year of what? Assessment. I hope we get that. So the first thing we are going to be considering is what? Our net profits. Net profits. net profit. So let me put naira sign. Let's make it naira and naira. Yeah. So net profit is how much? I think there's a way to split screen now. Okay. So the second one I want it to be this one. Okay. No. Okay. So this one.
Hi, Faiza. Good evening.
Hello.
Yeah, good
Hi.
evening. Yeah, good evening.
Good
Yeah,
evening. How are you?
I'm good. Please, can you open the link, like from the setting?
It's opened already. I'm not
Oh,
accepting anybody in it. Opened.
okay. That's fine. Thank you.
Hmm. So profit for the year is 31,025, right? Let's turn this to accounting. Hey, more split screen. Oh, number. Okay. Okay. So what is the next thing? We're adding what? Add disallow. Please, if you have question, just let me know. Expenses. So now my arc for doing this disallowed expenses is that I'll first go back to the question, go. Start from this place and be checking all the expenses. Sorry, the expenses. So now check one by one. Is depreciation an allowable expense for tax purpose? My people,
No.
is not allowable. So we have depreciation. How much is it? 17,875. What else? Directors and eliminations are allowed. Debenture interest, audit fees, legal fees, salary, miscellaneous expenses. Okay. So we are through with what is there. Now let's go to additional information. Legal costs comprise of retainership, cost of issuing director service agreements, cost of issuing ordinary shares. Ladies and gentlemen, in these three, which of the three expenses is disallowed?
Cost of issuing director service agreements.
Why do you think that is disallowed?
Because he's the company director, and I don't think it is expense in their ordinary course of business.
Is allowed.
Mm. Why do you think it's allowed?
Cost of issue.
Is somebody, I think somebody was speaking. I can't see anybody again. So the person that said it is allowed, I think a lady said it is allowed. Why do you think it is allowed?
Because it's attributable to the business.
Okay. It is attributable to the business. Mm. Oh, okay. Actually, it is an allowable expenses. And though it is attributable to the business, I would not lie, but sometimes expenses like this can be what is called incorporation expenses, and incorporation expenses are disallowable expense. So it's very hard to tell, like it's a bit hard to tell if it's allowable or disallowable. But this particular one is an allowable expense. It's allowable. If it's something like um I'm trying to make example, but example is not coming. But you put it at the back of your mind that incorporation expenses are disallowable expenses. Those are expenses that the company make before they become a company, like before they get incorporated as a company, right? Okay. So the how about this cost of issuing ordinary shares?
Is allowed though.
Is what
Is allowed.
is not allowed.
It is
Cost of
before
issuing
incorporation is allowed.
Yes. Cost of issuing ordinary shares is not allowed. Is like all these pre-incorporation expenses is not an allowable expenses. It's not allowed, please. 2,500. Now let's move. Breakdown of miscellaneous expense. Cost of installing new machine, is it allowable? Cost of installing.
It's
Why do
allowed
you say it's allowable?
because the cost is not a capital cost. It's just to for installation cost.
Okay. That would make me take you to your IS 16 PPE. So for IS 16, for you to get the cost of an asset, what are the things that comprises the cost of an asset?
Purchase cost and every cost that
Mm,
bring
the
the asset
expenses.
in present condition.
Okay.
Usable condition and all expenses
Use
are related to usable conditions.
You are very correct. So now this particular expenses now, do you think it fall under expenses that will make the machine usable?
Yes.
Of course it does. And because it fall under that, it becomes part of the cost of the asset. And because it becomes part of the cost of the asset, it becomes a disallowable expenses under company income tax. I don't know if you guys understand what I'm trying to explain. If you already added the money to the cost of the machine, you cannot add it as an expenses under company income tax anymore. Now, this particular amount is to be capitalized with the cost of the machine. Therefore, it cannot be expensed. I hope I'm making sense.
Yes.
All right. Thank you.
So my is disallowed, Abby.
Yes, it is allowed. So we have, how much is it? 3,750.
Okay. Please then. Please. What about the cost of issuing ordinary shares? Why is it disallowed?
It's like pre-incorporation expenses, like the expenses that you incur while you want to incorporate your company. Like that's what we can categorize cost of issuing shares as.
Okay. I don't know if you can just break that down in corporate or something you're talking about so that we'll get it, make it simpler.
It's just I believe um I don't think there's a simpler way of talking about incorporation expenses. If you want to bring forth a new company, right? There are certain steps that you take to ensure that that new company like come to life. All the expenses that you now incur in registering the company, maybe for normal CAC registration, issuing of shares to the public, um registering for VAT and blah blah blah, all those expenses are not tax allowable. They are disallowed expenses. Until you now bring that company, like until the company becomes incorporated, any expenses before that is not an allowable expense. Do you
Okay.
get it?
Thank you. Yes, please. Thank
Okay,
you.
ma'am.
You're
Okay,
welcome.
ma'am. Okay, ma'am. Hello, ma'am.
Somebody asking a question. Yeah, I can hear you.
Okay, ma'am. So according to her question, like she said, why is the cost of ordinary shares is allowed? And you said, um, after incorporation, I mean, it should
It's a
be allowed.
pre-incorporation expenses.
So, mommy, I'm thinking that without it, the company will not be able to start business. So, since it's part of the cost of the business, it should be allowed.
The law is that any expenses that the company make before they get incorporated is disallowed.
But they've started the operation already.
They
This
started
particular
operation
person.
that particular year. This one is the
20.
cost of
Okay.
issuing shares. The
Okay,
cost of
ma'am.
issuing the shares, like, for you to form a company now, let's say a public company, because it's only a public company that can issue shares to the public, or should I say private to issue share to, like, it's not to the public but to people that they know internally. So the cost of issuing all of these shares, it can include legal costs, what's it called, auditors money, and accountants money, so on and so forth. All of this will occur before the company become incorporated, especially for a private company. I don't know if you guys understand it well. Before the
Okay.
company come into existence, these shares have been issued, and any expenses that you make before the company come into existence is disallowed. Please hold that in your left hand. Do you get?
Okay, ma.
All right. So when it comes to allowable and allowable expenses, there can be a lot of conflicts. When I say a lot of conflicts, I mean a lot of conflicts, right? But sometimes you just have to use your discretion and say, oh, this one can be allowed, this one can be allowed, because you know the textbook will never cover everything for you. And that's one of the things that they will do in the exam, or they can just put one English and you don't know the meaning and you don't know where to categorize it. So you just use your discretion. Okay.
But a company can still issue share after it starts its operation. So how do we know whether it's before we started the operation or when it was incorporated?
Most of these companies are private, at least according to the way it has been portrayed, though. Their questions are something Nigeria Limited. They are not public limited company. So it's private companies hardly issue shares after incorporation. It hardly occurs. Moment you incorporate them is when you know who owns the company, and those are the people that will split the number of shares that they have, and that's all. Assuming we have PLC here now, and that's when an issue can occur. But they are private companies and they are not public companies, and private company hardly issue shares after incorporation. Though it occurs, oh, but it's not. How can I say it? It's not. But if it should happen, I would still disallow it, Sha. I've never seen such a situation, but I would still disallow it. Do you get me? I've never encountered such a situation, but personally, I think I would still disallow it.
Okay, ma.
All right. Okay, cost of new machine, I've written that extension and partitioning of office apartments. Are we there? What do you think about this one? Extension and partitioning of office apartments.
Disallowed.
Why?
Ma, please
It's
summarize it again.
Eh?
It's
Ma, please,
allowable.
what do you call it?
It's allowable. It's reasonable. It's only for the business.
Are you
Yes,
sure
yes.
it's
It
not
is
a capital
allowable
expense?
in accordance with what you just
It's only for the business.
Ma, it's allowable.
Hey, my people. This our company compass. We need to. It's like we'll solve a lot of questions. It is disallowable. It's disallowed. You guys need to calm down, eh? Let me explain. When you extend and you partition an office apartment, it goes beyond repairs and maintenance. It has to form part of the cost of the apartment now. It's not you're not repairing anything, you're not maintaining anything. You added to the apartment, you extended it, you partition it. You know what partitioning means? When you divide something, that's what partitioning means. So it's like maybe the office is like 3 rooms, then you made it 5 rooms. Then out of the 5 rooms, supposed to be like 5 rooms, you did it in such a way that the 5 rooms were able to like stand as like 7 rooms. I don't know if you get what I'm trying to say. This cost will be added to the cost of their apartment because it has this money has increased the value and the economic useful life of the apartment. I cannot remember the IS that covers this thing. Is it IS 8? I don't
IS
really
41.
what investment property. I don't think it's no.
IS
I think is I cannot really remember. Don't let me. I cannot really remember, but I know that
IS
yes.
40.
For is it? I don't think it's investment property that covers this thing. Is it that AS8 or
Is
something?
inside IS.
Is in 42 Abi?
Yes, 40 and
IS 40
16.
or 38.
Okay, okay. I should know that there's
38
a
is
formula that
independent.
covers it. So what we are trying to tell you is that this particular amount is going to be capitalized with the cost of the office apartment because it has increased both the value and the economic useful life of this apartment. Please, are we good? I know this thing is going to be a bit confusing. That's why I'm pained that you guys did not attempt the assignment. If you had attempted the assignment, you guys will have a lot of questions for me. But since you did not do it, you definitely will have questions. Office. I don't want to write apartment finish. So it's not.
Wait, sorry, is it disallowed?
It's disallowed. That's what
Ma,
I'm.
but
That
it's for the cost of the business operation. Oh.
it is for the cost of the business operation, but it is a capital expenditure.
Okay, ma.
It is a capital expenditure. That's what I've been trying to explain. That this money is to be added to the cost of office apartments because it will increase the value of office apartments and also the useful life of office apartments. It is not an expense, rather it's going to be capitalized.
So every capital expenditure is disallowed.
Yes.
Sorry, if it is purchase of plants that is in the question, we should disallow it.
You disallow it and you take it to capital allowance. Do you get what I just said?
Voila.
Yes.
You will disallow it. For that example that I just said, if you saw purchase of plant in this miscellaneous expenses, you are going to disallow it here. And when you want to calculate your capital allowance, you calculate it there. You take it to capital allowance and calculate capital allowance on it. I guess we are good. Let's continue. Staff party. Is staff party
Disallowed.
disallowed? Eh?
Disallowed.
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 Staff party is not disallowed, it's allowed.
Ma, it's
Voila.
disallowed though, because it's not relevant.
But it is for the company, it's for our staff.
Why are they doing party?
Still the staff that have work from January to December, they will not enjoy themselves.
But
It's
this
the
honestly,
expenses
these
is
people
not
are confusing
reasonable.
us. These people are confusing us. How will they allow
I know
someone?
it can be
Ma,
confusing.
Ah,
So,
that but to me, I feel it's allowable. It's allowable because what is reasonable to you cannot be reasonable to another person. But to the organization, this is reasonable for them because the staff have worked.
exactly,
Yes, the staff have worked
exactly.
throughout the year and they deserve to be celebrated. So it's reasonable to them.
but sir, it can be reasonable to the company, while it will not be reasonable to tax officials.
God
No,
bless
it's not
you.
the tax authority that will determine that in almost most situations, it's not the tax authority that will determine what is reasonable to the organization because it seems that it's something that attached to the company. So it's reasonable to the
Actually,
yes, to the
I get
organization.
your point. I get your point, all of you. We have to consider everybody. We have to consider the organization, and also we have to consider the tax authority, right? But in this case, it is allowed. Now, if you see something like gifts to customers, gifts to customers is allowed if it is a branded gift. That is, you brand the gift with the company's name and you gave it to customer, is an allowable expense. But if the gift is not branded, okora, chocolate, you gave it to customer, it's not allowable, it's disallowed. I don't know if you understand what I just explained.
Ma, I understand though, but I still disagree with you. Staff party.
Staff party is allowed, it's an allowable expense actually.
Sorry, Ma, somebody like explain this particular company income tax for me, and the person disallowed this same question that came out. The person disallowed staff party.
It's
That
allowed.
the expenses is not holy and is not reasonable.
It's allowed. I've come across that party in more than one question,
All
and it's
right.
allowed. It's an allowable. Every company owes end of the year party. At least every reasonable company, sha. So it's an allowable expense.
Okay. We have deliberated on this. Why, to some of us in our own view, it may be allowable expense, it may be a disallowable expense. Well, there are some expenses that may appear reasonable to us, but it might not appear to tax officials. But subject to review of the tax computation, how we arrive at our accessible profits or income, they may come across, they may now look at those expenses and now realize that, going by the nature of the company and all that, this can actually be qualified as allowable. Some of these things are subject to debate. They can debate it, and at some point they
Actually,
will agree. So for the purpose of exam, let's not spend our time thinking too much. If you think it's allowable, use it, because questions like this, the marking is more of working than accuracy. So
yeah,
do your
actually, he's right.
posting.
So
Do your posting, get it right. Then even if it is 25 marks question and you are denied 5 marks, you have 20, you move on. But if you dwell too much thinking about it, you may exhaust the time allocated to the question and end up still doing the wrong thing.
Ma,
actually, you are very right. Thank you for that. So,
let's
like you said,
continue.
the marking
But
guide for tax, they mark per, how can I say it? Like for this depreciation can be 1 mark, 1 mark, 1 mark. Do you get? So just try your best. In taxation, you can never say that you're 100% sure that, except of course, the question is very simple. You cannot say you're 100% sure that you're correct, because you'll be surprised as to some of the expenses that they will allow and some that they will disallow. I tell you.
okay, Ma.
But it's still nice you're telling us the one that is allowed with reasons.
Yes. I'm telling you the one that is allowed with reason. No, the reason why it's easy for me like this is because I've read and I've worked on this question before. Do you get? If it's also my first time of seeing the question, I might be thrown off guard with some of the items that will be there, and I'm like, oh, is this allowed? This allowed? I have to debate and choose a side on spot. I don't know if you understand me. Me,
Yes.
I find it easy because I've done the question, like, before. It's not a new question to me.
Let's
All right.
continue.
So let's continue. Okay. Cost of entertaining suppliers. What do you guys think?
Allowable.
Is allowable? Yes. So now this investment income, is that all the expenses? I think so. Wow, this question is actually very easy. So that's all the expenses. Let's calculate it. Àti wàá mọ ibi tí gbogbo kíní yìí wà báyìí. Oh, okay, let me use underline. Okay. So now we want to add up the ones. Okay, we're adding it up. Then we are going to do what? Less non-taxable income. Now, before we even come to this investment income, let's go here. We have gross profit, of course, that one is taxable. Investment income, we'll go and meet it down in the additional information, so let's leave it. Profit on sales of equipment. Is it an allowable expense or a disallowable expense?
Sorry,
Disallowable expense.
Why do you think is sorry? It's not an expense, it's an income. Why do you think is not like it's not allowable?
It's not allowable because this is you are going to charge it on the capital gains.
Okay, okay, that's
When computing capital gains, you will consider it there.
okay. Okay, there's another reason. There's another reason for disallowing it. Apart from that, I think there's like two more reasons, and I've said one of the reasons before in our last class. This profit is what we know as notional profit. I think I explained notional profit and notional expenses in the last class. These are expenses or profits that we did not receive or pay. For example, depreciation. It did not go out of our bank account, nor
That
did
is
we receive
non-cash.
it as cash. Do you get? So that this profit on sales of equipment is probably the difference between carrying amount and sales proceed. Remember that carrying amount is just a book value. This money did not come inside our account. It's just like depreciation. So it did not really, it did not move. So, and this equipment that we sold, we are still going to calculate balancing charge or balancing allowance on it. So we are still going to meet it in capital allowance. Do we get?
So it's not
Yes.
taxable.
No, it is
It's not
not.
taxable income.
If you tax it, you are going to be taxing it 2 times now because it will add to balancing charge too.
Mm.
Do you get?
Yes.
So that one too will come here. How much is it? 4950.
1950.
Then now let's move to investment income. Where is it said? See, dividend from Nigerian company net, loan interest from Nigerian company. So this loan is an income for them. There's nothing wrong with it. They are going to tax it, right? Non-trading investment. So this is investment that they made investment on behalf of the company, and this is the money that they got. Then this one, dividend, is a franked investment income. Franked investment income. Franked investment income are income on which withholding tax is the last tax on it. After withholding tax, we don't tax it again. You see that they wrote net here. It means that this money is net of withholding tax. They have removed withholding tax on it before they even send it to them. So if in your question you have net, you will remove net. If in your question you have gross, you will remove what? Gross. Are we good? It's what they give you your question that you will remove. So that's why I said dividend from. You don't understand.
Please
Did you
come
say you
again.
don't understand? All right, okay. So what I'm saying is that this. I did not get what you just said though.
I say yes, ma'am. Could you please explain that again, please? Sorry.
All right. Dividend is a franked investment income. We spoke about it when we were doing the written aspect of CIT. Franked investment income, their income on which withholding tax is the final tax on it. And the only thing under FII is dividend. Before it was dividend and interest, but now it's only dividend. So now this dividend that the company has received from a Nigerian company, now Nigerian company, please, not from abroad, from Nigerian company, it means that the withholding tax that they have removed, that's why they wrote net. Net, it means that this money is not the total dividend. Withholding tax have been removed from it. But since this money is what is inside our profit, this money is what we are going to remove from it. I don't know if we get it. This
Yes.
money is what we remove
Yes,
straight.
ma'am.
Whether they write
Then you said
net,
something about
I mean
gross.
they wrote gross. Yes, gross means that is the amount you go. They have not removed withholding tax. Regardless of whether it's net or gross, is what they write there that you should carry and remove too. Do you get?
Well, my question is that are you going to gross it back to add it, or you will just ignore it?
We are not grossing. That's what I'm explaining to you. We are not grossing it too. You are not going to gross it. Why? Because it is what is in your profit that you are going to remove, regardless of whether it is net or gross. So this becomes our adjusted profit or accessible profit too, because there's no loss, right? So now that we have our adjusted profits or accessible profits, what else do we have? We have balancing charge and we have capital allowance. So the first thing we add is what? Balancing charge. Remember our format, oh, you know we check format. Oh. How much is balancing charge? 2740. Now capital allowance. Capital allowance. So we don't have balance brought forward, right? Balance brought forward is 0 for the year. For the year is how much? 10,325. So total capital allowance is going to be this 10,325. Now we're not going to restrict. Remember our restriction. So restriction. Let's calculate restriction 2/3. Let me write it. 66 2/3%. That's our restriction. So let's put our restriction here. Then we'll now compare. Equals to 2/3 multiplied by how much is our accessible profit. So this is higher. We are not going to be using this. Capital allowance relieved is going to be lower of the two, and this one is lower, equals to this. Let's put minus because we are deducting, right? So equals to this place. So now capital allowance balance carried down to the following year is going to be 0, abi, since we did not restrict it. It's going to be 0. Now this place is not. Let's put it here. We have taxable income, and it's going to be yes, taxable. Some people will call it total income. Same thing. Okay, ladies and gentlemen, now for the tax liability. So we have tax liabilities, company income tax, special education tax. Now, before we now write these things, is somebody raising up a hand? Awa, you can unmute and speak.
Ma, please, can you go back to the solution?
Okay.
Ma, please, this balancing charge, we are going to add it or let it?
No, we're adding balancing charge.
Okay.
Remember that balancing charge is when sales proceed is higher than tax credit down value. Is a profit. We want to tax it too.
Okay, ma. Ma, please, how do we now get this 33,000, 33 something?
Remember, your restriction is what? 66/3%. And I told you that this 66/3% is the same thing as 2/3 straight away. 2/3 straight away with that percentage. So 2/3 multiplied by what? Accessible profit. We give you this. That is your restriction. So you now compare this one and this one. Which one is lower? You use the lower of the two. This one is lower. That's why we are using this one. Are we good?
Yes, ma. But the one that is lower is in the question.
Yes, they gave us. We did not calculate capital allowance in this question. It was given to us.
I'm sorry, ma. I was not in the last class. That's why.
Oh, you should have watched the video actually.
Excuse me, ma'am.
Okay. All
Sorry,
right.
ma'am.
Yeah, you
Yes.
can speak.
This restriction, is it necessary that you will include it, or if you just calculate on your this and discover that it's higher than the capital allowance, you will just leave it, or it's necessary to include it?
Well, some people say it's not necessary, but me, I always like to include it. I always like to show it that this restriction is higher or is lower, because if you get used to not including it, you might actually forget one day, and it's going to be the lower amount, and you don't know. That's why I always prefer to put it there, so I will not forget when it is necessary. So, I would recommend that you put it. It's not compulsory, but I would recommend that you put it, because most of the time it's this one that we'll use. But if you get used to solving question that you are using this one, you might forget to do this when it's necessary. That's why I recommend that you always do it. Okay, so this question now, we are talking about the total tax liability for the relevant year of what assessment. But the company started trading in this particular year. Now let us look at the okay, gross profit. We don't even know the revenue. I want to see if the company is a small company new. But according to this gross profit, it's not a small company. 140. We don't know the revenue. But you cannot have this kind of gross profit and your revenue is going to be small company. So definitely the company is not a small company. And our company income tax will be equal to what? 30% multiplied by our taxable income. Remember that this one is quoted though. We quote this figure. So this is supposed to be 12,604,500 naira. Please, you guys get what I'm saying?
No,
I
ma.
hope you guys. I'm saying that we quoted this in thousand. Don't forget, level of approximation, what's called level of rounding or precision level here. Our precision level is in thousand. So if you want to write this in your notes, it's 12,604,500 naira. You multiply by the 1,000 that you have put up there.
This
Okay,
why
ma.
we get the 12 million.
Eh? It's company income tax now, 30% of your taxable income.
Okay, but
So for tertiary education tax, this is 2023, right? So we are using 3% equals to 3% multiplied by accessible profits now. Where is it? Here it is. So it's usually not much. But please don't forget again that we've quoted in thousand. We've quoted in thousand though. In your notes, don't quote these two figures. I don't know how to unquote it without um um I don't know how to unquote it, Sha. Please in your notes put the additional 30 there. Oh. So these are
Okay,
total
ma.
tax.
CIT is how many percent? And TET. What's TET, ma?
Tertiary education tax.
Education tax.
CIT is 30%. TET for 2023 is 3%. Remember that we spoke about the different rates for TET depending on the years that you are giving. 2%, 2.5, 3%, depending on the year that your question covers. For this year, it's going to be 3%.
3% on adjustable profit.
On yes, accessible profits. Accessible profit. This is
Adjusted
our
profit.
profit, yes. Okay. I think that's it. That's all. Now, let's go to B of this question. We are just going to, Explain the other basis of assessing companies to company income tax apart from the normal basis. No, what we have just done is the normal basis. Abi, what we have just done is the normal basis. Apart from this method of calculating tax, these are total tax. Let me write it down. Apart from this method of calculating tax, which other method do we have?
We have change of accounting dates.
No, that's not a method of calculating tax now.
Yeah, dividends.
Eh?
Actual year basis.
No. You guys are
We
mixing
have
things up.
Gross turnover basis.
I don't
Gross
even
turnover
gross profit.
basis.
We can use gross profit. We now less allowable expenses.
That's the normal basis, and that's what we have just done. But somebody said dividend basis, which is correct. Somebody said gross turnover basis, which is correct. Then I think we have one more now.
Minimum
Minimum tax. Minimum tax. So this B, we have what? Dividend basis. We have minimum tax basis, and we have what? Gross turnover basis. So let me just make a brief explanation because we have done this thing before. When we were doing the listening aspect, most of you were going offline, you did not listen. Now see, this thing that we are doing is past question. So if you have question, please talk. Please talk. That's why I like you guys to go and check it first before we come to class. That's why I give it as assignment, honestly. So you have questions ready. Okay. So for dividend basis, it means that the tax will be calculated on our dividend. Now, the directors of the company agreed to pay a dividend of 5% on its ordinary shares. So I don't know if you know the ordinary shares, Sha. Oh, okay, we have 5 million shares. So 5% of 5 million will be the dividend. So if you want to use dividend basis, our tax will be 30% on that what dividend that they pay. But for minimum tax basis, don't forget, our minimum tax is what? Is 5% of gross turnover less franked investment income. 5% of what? Gross turnover less franked investment income. So for this question, assuming we want to calculate minimum tax now, we don't know our gross turnover because they did not give us the revenue, but we can use our gross profit. So if we now use that gross profit, we'll remove what's the dividend. Remember that dividend that is here, that I told you that is a frank investment income. You remove it from it and then calculate 5% of it. That is a minimum tax, right? That is a minimum tax. In fact, we are supposed to do it safe because you have to look at the higher of the two, higher of this total tax and minimum tax, and that's what you will pick. Let's do it here.
Ma,
Minimum.
please, what year is this?
Eh?
Which year is this? Because you said from 2020 to onward is 0.5.
I don't
And then from,
understand. Is it for minimum tax?
yes, ma.
No, you did not get that explanation. Minimum tax, this is minimum tax before and now, right? So between January 2019, January 1, 2019 to December 31st, 2021, companies will choose two out of those 3 years and they will apply 0.25% instead of 5%. And this is to
Okay,
cushion the effect of COVID-19. And that is just for that particular period. Do you get it now?
okay, ma. Yes, ma.
Mm.
So from
So minimum tax is
2022 downward is still
yes,
0.5. Thank you.
yes. So we have 140. I'm not going to be quoting as I'm writing this thing. So minus How much is the dividend? 2,100,000, which is equal to how much do we have now? Let me calculate it here. I plan to do two questions. We are still on question one, and the class is almost over. Question two is harder than this one. This question one is very simple. Okay,
We'll do it.
and I
We'll
want
do
us
it.
we'll do it. You guys that will be running away now. If
We'll not run
it's
away.
10 o'clock, you guys think you are tired. Multiply by 0.05, I guess. That will be 6,935,000, which is small. So 6,935. Sorry, 935. 1, 2, 3. So it means that we are going to be paying this one because it is higher. Do we get? We are not paying minimum tax because minimum tax is small. We are paying this total tax because the total tax is what is higher. Now, gross turnover basis is when the tax authority would just come up with a fair percentage and multiply it by our gross turnover. That one will now become our what? Accessible profit, on which, or taxable profits, on which we are now going to multiply our tax rate of 30%. And that is it for B. All of these things are things that we have discussed in the previous class. This question, practice question one, I would have loved us to discuss it, but we'll see time, honestly. So, see this one. This is all of this is their what's it called? Their past question. The incorporation expenses that I was explaining. See it here. Your comments on the breakdown of incorporation of 270,000 and tax implication of each item. Let me go to the incorporation expenses. Where is it? See it here. Payment for stamp duty, professional fee for incorporation, CAC registration, additional cost of incorporation. All of those things are expected to be what? To be,
Sorry, ma, which year is this past question?
I don't know the year. I just took them when I was compiling the notes. I don't know the year, honestly.
Since the question said financial year for December 2024, if the date is not changed, I think it should be 2025.
Oh, I changed date, yo. I changed date and I changed name. So
So till
you cannot
October.
use the date to judge.
Excuse
What
me, ma.
else? Yeah,
The
Abby
minimum tax, is it 5% or 0.5%?
is 5% too. It's not 0.5% too.
Zero point
Abby?
five is 50% to 0.05 is 5%.
Yes, I use 0.05. Oh.
0.05 is 5%.
Yes, I did not put percentage now because when I was using the calculator, I don't put percentage. I wrote 0.05 straight. Do you get? I didn't write 0.5, I wrote 0.05.
Yes, ma'am.
Okay, I think that's all. Ah, sorry, I'm trying to remember where I got this question. Is it that past question or the pack? Because I'd like you guys to go through the question, please. Maybe in the next class, I will discuss it. You can go through it because we don't have time. So this question two, I think you're going to do this one by yourself. It's similar to what we just done. This Shade Adu Limited, similar to what we just done. Just that it's for 2 years, so you'll be working for 2 years at the same time.
Sorry to
Similar.
interrupt you. How do I get this question you are displaying for us, ma'am?
If you pay for the material, it's on the drive. I've uploaded it on the drive already. It's there.
Okay, ma'am.
Yeah, it's there. So number three, after number three, we are done. Please see this number three as short as it is. Oh my God. So I did not check. Is it Laolu or Adeolu? Did you get the question? Did you get the answer? For illustration two. Ọmọ yóò ti lọ wá jáde. How did you get it? I don't know which one it is actually. I don't know. I don't see them. Okay. So Adeolu, did you get the answer? I think you got it now. Abi 42015. Let me see. Oh, clap for yourself. You got it. Oh. Can you see that it's good to try? Let me see your CIT, and I think your CIT is different. Why is it different with our own? Our own is 12604. What did you calculate your CIT on? Then one for our CIT and TT is different. I don't know where you got your own figure. Maybe you made a mistake when you were picking figures from CIT. Ayadelu, you can mute. I cannot hear you if you are speaking. I cannot hear you. Okay,
They
let's see.
adjusted profit. I added it with balance sheet charge to make it assessable profit. That's what
You
I did.
added what?
I added the adjusted profit with the balance sheet charge as my own assessable profit. So I now
Oh,
pay 30% on the addition of it.
I don't think it does it work that way. Let me go back to our format. You might have a point. Let me go back to our format. Because I usually treat after loss, we give you accessible profits. After that, capital allowance, then taxable profits. So I did not consider anything allowance, anything capital allowance when I wanted to solve that question. So no, according to this format, I think you are wrong. You are wrong. So if you are consider loss relief, some people use this personally because that's how I was taught. This to me is an adjusted profit. After you adjust loss relief, accessible profit. But I just want to follow the pack. Pack is saying accessible profit for this place. So well done. You even tried. In fact, you tried. I did not expect that you tried. So now, ladies and gentlemen, let us go through this question. Let me read through it. Everybody, I beg you, if you are eating, remove your hand from the food. Just listen to this question. Let us do it together. I wanted you to try it. I have been so happy if you guys have tried it, honestly. But then, Koti Baje, let's do it. Divas. Divas Nigeria Limited. Abi? So they have been in business for so many years. The company is into supply of furniture. Oh, my people, I just remembered something. This is not needed. I just learned what I'm about to teach you guys like 2 or 3 days ago from my boss at work. Minimum tax is not should I say available? I think I even mentioned it when I was teaching you, but I did not know it up to this stage when I was teaching you that in last class. For minimum tax, a company that's in the first 4 years of business don't pay minimum tax. Whether the company is a big company or a small company, as long as it is the first 4 years of commencement of business, they will not pay minimum tax. So this company, remember that this company is the first year. So minimum tax is not applicable to this company. I hope you understand.
You understand? Please come again.
Minimum tax is not applicable to any company in their first 4 years of business, whether the company is a small company or a large company. As long as they are in their first 4 years, minimum tax will not apply to them. So it means that even if their minimum tax is higher, they will not pay minimum tax. They will pay their normal tax.
Sorry. So what you're trying to say is that let's say a company started business 2024. So 2024, 2025, 2026, 2027, they will not pay minimum tax.
Yes, it's their normal tax that
Yes,
they will
it's their
pay,
normal tax that
no
they will
matter
pay.
how small it is. I hope you guys
Please,
get it. And just remember
I
that
have a
that's
question too.
okay, you can ask.
Since you said they will not pay minimum tax, is that
Mm,
what we call the pioneer period? Because I also learned that some companies not pay tax at all when they just
no,
start.
no.
That's
Pioneer is
pioneer.
different though. This one is not like they will not pay tax. So if Pioneer will not pay tax at all. These people will pay tax. But in normal circumstance, we are going to compare their normal tax, this figure, and the minimum tax, and they will pay the higher of the two. But in their own case, even if minimum tax is higher, they will not pay minimum tax. They will only pay their own personal tax. But fortunately for the company, if the company is now a small company are not expected to pay CIT, it means they will not pay tax at all. I hope you get me. Are we good? I'm hoping we are good, Sha. I
Okay,
need you
ma.
to understand that information, please.
Okay, ma. That's if they say that a company is incorporated this so year and is not up to 1 year, the company now commence business. That means is minimum tax.
No, no, no. You don't judge based on that. For minimum tax, you want to know if the actual tax of the company is higher or greater than the minimum tax. That's why it's called minimum tax. At least the lowest tax that the company must pay, right? But the government now give new company grace. If you're a new company, for the first 4 years that you have just come into existence, don't pay minimum tax. Don't pay minimum tax. So for a large company, even if their total tax is small than their minimum tax, they will pay their total tax because they are currently exempted. They are in their first 4 years, right? But for a small company, they will not pay minimum tax and they also not pay CIT because they are a small company, at least for the first 4 years. But after 4 years, and the company is still a small company, then they will not start paying minimum tax.
What is the requirement for a small company? What will you see and know that this is a small company?
Is revenue.
I have a question, ma.
Wait, let me first answer the lady that just asked that question. So for a small company, with that question, I can tell that you are not in the last class and you have not watched the video because that was the first thing that we discussed in the last class. So for a small company, we are looking at gross turnover lower than 25 million, lower or equal to 25 million. Medium companies between 25 million to 100 million. Large companies greater than 100 million. That is what you will follow for your exam. But for knowledge sake, the new tax reform, this new tax act that just came out, it divide company into just two. It has scrapped medium company. We no longer have medium company. We now have only small company and large company. And small company are company that have gross turnover of less than or equal to 100 million. But as long as your gross turnover is greater than 100 million, then you are classified as a large company. Small companies are exempted from tax. Company income tax, capital allowance, they will not pay it. Large companies are to pay at 30%. But for medium company, for the Odu, medium company will pay 20%. Medium company, so small company 0%, medium 20%, large company 30%. Are we good now? So
Yes, ma'am.
without further ado, let's somebody said she has the question. Oh yeah, talk.
Yes, ma. My question is that for example purpose, are we to apply the knowledge of the new tax law or the
don't
old tax
don't
law?
do that. Don't do the new tax reform is not yet examinable for ICANN purpose because according to ICANN, they will only test it after 6 months of implementation. So now it's not yet 6 months. But the reason why I always tell you or give you the information is that I don't know what ICANN can do. ICANN can be very crazy, and I don't want anything to make you guys surprisingly. I don't want you guys to be surprised at any question. If anything should come, you should be able to handle it. That's why I give you all information.
All right, thank you, ma.
You're
Sorry,
welcome.
ma, this new tax law now, they just implement it January, abi. Before May, it will remain 1 month for it to be examined.
Yes, it is in the next day that they're going to examine it.
Okay. I pray.
We are praying too, honestly. Okay, so Divas Nigeria Limited has been in business for so many years. You should note that it means that Divas is an ongoing what business. The company is into supply of furniture, features, and fittings. Since the date of commencement to the accounting year end, October 31st, 2018, it had posted reasonable profits. In 2019, a competitor, ABC Limited, was able to introduce a new brand of furniture into the market, which boosted the sales of the company. Unfortunately, this had an adverse effect on the gross turnover of Adidas Nigeria Limited. Sorry, the original question is Adidas, so I did not remember to change that name. That's why. So Adidas is Diva, so please don't get confused. Despite concerted efforts made by Adidas Nigeria Limited to compete favorably with ABC Limited, its fortunes continue to dwindle. To allow for capital injection, directors of Adidas Nigeria Limited decided on February 1, 2020 to change its accounting date to be in line with one of its foreign partners. The board therefore decided that the accounting year be changed to December 31st every year. We are provided with the following additional information. We have adjusted profits for December 31st, 2019, October 31st, 2019, December, blah, blah, blah. We have gross turnover, which is the revenue for that 2019, 2021. We have capital allowance. For the relevant years of assessments, number one, compute accessible profits. Number two, compute company income tax liability. Ignore minimum tax computation. Ladies and gentlemen, this question is testing two things. Our knowledge of basis of assessment that we did in the first, like when we first started this course. Number two, our knowledge of company income tax. I don't know what to do because the time is fast spent, and I honestly would like you guys to do the basis period. The, the question says compute accessible profits. And remember that when we were computing accessible profits here, what did we do? We use the normal basis to get our accessible profits here. Abi? Now in this
Yes.
question, can we follow this format? Guys, answer me.
Okay, okay, ma.
Can we follow this format in this question?
Okay.
Yes, ma.
How do we follow this format?
Okay, you're asking question.
Yes, I'm asking a question that in this Wazobia Nigeria Limited, we got our accessible profits by adding up salary expenses and lessening non-taxable expenses. Can we do the same in this particular Adidas question?
No, I don't think we will do the same thing because we will go with a gross turnover basis here.
Okay, okay. So that's one. What's it called? Um, that is one way of saying it. So your opinion is that we'll go with gross turnover. As right as that opinion would have been, it is wrong in this question. The reason why they gave you gross turnover is not to use the gross turnover basis. It's only the tax authority that can use gross turnover basis. Why? Gross turnover basis is saying that the tax authority will apply a fair and reasonable percentage. Do you know the fair and reasonable percentage that the tax authority will apply? No. So you as a tax consultant cannot use gross turnover basis. So that your suggestion is not allowed. Abi is disallowable in this case. So guys, without further ado, this is 9:50. By 10 p.m., I want to see in the comment section our accessible profits using the basis period. Let me come again with my question. This one that I just highlighted, see it here. From this place, this place, adjusted profit to this place is nothing but change in accounting dates. I would
Accounting
have loved you guys.
dates.
Yes. I would have loved you guys to do this question by yourself, honestly. Spending me that this thing is not the physical class. I like you do it by yourself. I'll be watching you like this, like hawk. But then I cannot see you guys in your house. It's spending me. If you read this question very
So, Ma,
well,
can you give us today? Can you give us today so that we will try it?
No, let's just do it. Let's just do it. We'll read it. We'll not fuck
Please
up
let's
again.
do it. Oh,
we'll do it. We'll do it together. There's no time, safe. We need to move to next topic by next class at least.
maybe we should do it in the next class.
No, we'll do it now.
Everybody concentrate. Oh, yeah, let's do it now. We don't have time, please. We don't have time. Next class, I would like us to move to, even if I'm going to do CIT, it's going to be another question and not this one. Okay. So, if you look at the question very well, they commenced when? In 2018. Don't forget to. They commenced in October 31st. Sorry, their business end is October 31st, 2018, right? And they
Yes.
commenced business then in 2018, sha. They did not tell us when they commenced business, go, but they sha told us that the accounting year end is October 31st.
October 20.
They now told us that in February 2020, they now decided that October 31st year end is not favorable to them again. They don't want it again. Let us change to what? December 31st every year, which is what they have done here. They have now provided, if you guys remember my explanation when we started basis of assessment, I said that adjusted profit follows what? Accounting year. And what do we now do to follow tax year? We do what? Accessible profit. We do accessible profit to follow tax year. So now they have given us adjusted profit, but this adjusted profit is in line with accounting year. As you can see, year ended, period ended is in line with accounting year. How do we adjust it to what? To tax year? Is through what? Our basis of what? Assessment. And the scenario of this company shows that this situation is a change in accounting date situation. They have simplified for it. In fact, if I'm the one that said this question, I'll not put this thing that they change the accounting date. I'll only leave this thing here. Only those that are vigilant and cautious would know that, oh, something has changed October to December. I hope you guys are following. So the question, the examiner is very nice by telling you that they have changed their what? Accounting date. Now, what I want us to do now is to compute the what? Accessible profit. Computation of accessible profits. Now, remember that in changing accounting date, we used to do what? Workings and what? And solutions. So workings will be at the side. To help you guys, because I know that you guys might have forgotten this thing in accounting date. Call on Sham, you're not supposed to forget actually. You're not supposed to forget you. As you can see this question now, past question, I just don't know which year. God
Ultimate.
No, it's not changing the accounting date that is ultimate and penultimate. That's cessation. Changing the accounting date is new date. Let's use old date first. Old date, new date. Then we are going to have what? Year of assessment. Basis period. Base period usually take like 3 lines now. Then accessible profits. Do you guys remember now? I bet you want it.
Oh, me, I did not forget.
Hey, thank you for not forgetting. So, did you guys get this thing now? They will do another basis period. Can you guys try it?
Ma, please, let's solve it.
Just be
Ah,
calling this thing now.
okay, no problem, no problem. We're going to solve it. Okay. So now, this one is going to be um so let's start with old dates. What is the rule for changing accounting date, please? Rule 1 says what?
Identify
For the year of change.
the
What is
year
the
of
year of change
assessment.
in this
Yes.
situation? What is the year of
The year
change?
of
2020.
2020.
2020.
2020, yes. So 2020,
20,
abi?
yes.
What is the next
Yes.
rule?
2021,
Like you
2022.
should identify 2 years preceding the year of
The
change.
following,
The
yes.
following
Following,
2 years.
following, not preceding, no, following the year of change. That was 2021 and what?
2022.
22, abi?
Yes.
Yes.
So now, the basis period for this one will be old dates because we are under old dates, abi? Let's first do old dates, then we'll
Yes.
do new dates. Let me leave a space so we'll not get confused. Okay. Okay. So now, this basic period will follow the old date. What is the old date? The old date end in what? October
31st
31st.
October.
If it should end in 31st of October, when did it start?
October.
1st of November.
November
Thank you. So we have 1st November
2018
2018 to what?
to October
31st
2019.
October 2019. Abi? That is
Yes.
the first one. Then the next, this for 2021 is going to be what? 1st November 2019 to 31st October 2020. Abi?
Yes.
1st November 2020 to 31st October 2021.
2021.
We are good with the basis period now. Please, everybody, pay attention to the accessible profits. In this 2020 year of assessment, we have this figure directly here. Year ended October 31st, 2019 is here without any wahala, is there. 24, 500, 123. Abi?
Yes.
Now, for this particular period, we have 14 months financial statements or adjusted profits. That's why the word is what? Period ended and not year ended. I think I already explained the difference between the two for us at the beginning
Yes.
of yes, of the lecture then. So if your month is more than or less than 12 months, you will see the word period ended. But if it's 12 months, that is one whole year, you see the word year ended, right? This one now include from November
Wow.
2019 to
So
what?
this my
December
period, yeah.
2020. It has 14 months. But what we need is just 12 months of this period. So what do? We equal to what?
You correct.
12 over
12
14,
over
exactly.
14.
Multiply by how much is the figure?
38,200,000.
Do we get it? So now, for this last one, we have from November to December in this place. We have November 2020 and December 2020 in this particular second place. Then we have from January to October. Who is that? That person to mute.
Mute
Who is?
your mic now.
Thank you. Ajiolu. Oh, thank you for that. You are correct. Thank you for the basis period. Okay. So because it's very important. See now, if you get this kind of question in your exam, and you do not remember basis of assessment. In fact, you must remember, because that's the basis. You have to know the basis. You must remember, because in this question, if you don't know it, you just cannot do it. You are stuck at A or at B. You cannot do any of the two. All right. So this one, like I said, November and December is here. Remember that in this place we have removed 2 months. We have removed 12 months. Sorry, the remaining 2 months falls into this place. Then, if you have 2 months here, the remaining 10 months to make up a year is in this particular place, because we are from January to October in this place. So to get our assessable profit here, we're calculating two things. Number one, we have what? 2/14
Over 14 times 38
multiplied
million
by
200.
38,200. 1, 2, 3. Abi?
Yes.
Plus, open bracket again. 10/12 multiplied by
It's 44,100.
44,100. 1, 2, 3. Let me put this one in brackets, because I don't want it to go and multiply with. Okay. 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 So that's what we have. Please, I hope we're all good. Now add it together to give us this figure. Hold it. Now let's come to new dates. Let me make this one small. Let me make this one small too. Okay. So for new dates, we are going to be following what? The new date. The year of assessment is still the same, but we'll be following the January to December new date. So we have 4th of January 2019 to 31st December 2019. 1st of January 2020 to 31st December 2020. 1st of January 2021 to 31st December 2021. Please, are we good?
Yes.
So I wrote this one.
Are we going to ignore the October, the first one?
We are going to work on it. When we are doing the accessible profit, you will see how it works now. So now we come here. Remember that in this particular 24,500,000 is from what? November 2018 to what? October 2019. So
Yes.
it means that from January 2019 to October is in this 24,500. January to October is how many months? 10 months. Am I right?
Yes.
Yes.
The remaining 2 months, is in this next month, which is what? November and what? December 2019. So just like we did it here, we also do it here now. Equals to, open the first bracket. We have 10/12 multiplied by how much?
24,500.
24,500. 1, 2, 3. You close the first bracket, you close the second bracket. Plus, open another one. 2 divided by 14 multiplied by
38,200.
38,200. 1, 2, 3. Close the first, close the second, enter. Then we have our figure. Please, I hope we are still on track.
Yes.
Thank you. So now for this January 1st, 2020 to December 31st, 2020, everything is here. All the 12 months is here. So we just do equals to what? 12 divided by 14 multiplied by 38,200. 1, 2, 3. And that's what we have. This January 2021 to December 2021 is here straight away. No correlation, nothing. That's what is here. 44,100. Then we add it together. Remember, what is the rule for changing the accounting period? Which one do we choose?
The one of the higher.
The higher of the two.
Exactly. So
The
it means
new
our
date.
solution will be what? This particular one. Copy here. And you come and do what? Let's paste here. paste. So let me insert should it's not reach this place. So what we'll do is let's move this one in. Let's move it. I thought I copied it. No, I cut this stuff. Oh, sorry. I intend to copy. Okay. So what we'll do is to move this thing is just giving me issues. Let's first move before I copy them. I need to shift it to So this year of assessment based period, say accessible profit. Look at me, pẹ̀lú var, right? Copy, paste. Okay. This is going to be a lot. Okay. So for new dates, everything has scattered. Oh God. Okay, we have it back now. So we have this one. Copy. Come and paste it here. Paste. I cannot do this one because it will affect the work that we have done up. So let's just leave these two. Should be like that. Okay. So basically we have 2020, 2021, 2022. Okay. I think we are good now. That's the first step. This is the answer to A. A says what? Compute accessible profit. We are through with A. This is what they ask you to do. It's as simple as that. But if you don't know what to do, it might cause what problem. Okay. I think we can move to question B now. So now B says compute the income tax liability and you should ignore minimum taxation. Now, let me now tell you the reason why we have this gross turnover here. So the guy that said that we are using gross turnover to compute tax is wrong. Oh. I like the fact that you even thought to that, like to that aspect. I like the fact that you were able to think towards that route. I like that. Thank you. But no, in this instance, you cannot do that. The reason why they gave you gross turnover is for you to know whether this company is a small company, a medium company, or a large company. Remember that the company income tax rate for small company is what? 0%. Medium company, 20%.
20%.
Large company, 30%.
30%.
Now look at this first year. What category does the company fall into in the first year?
Medium.
Medium. Second year?
Medium.
Third year?
Large.
Thank you. So in the first 2 years, how many percentage for company income tax would you use?
20%.
This last year,
30%.
that is why you are giving your gross turnover. That is the main reason why you are giving your gross turnover. Guys, do we get it?
No, ma, please, can you come again?
I'm coming. I'm coming, please. Let me just type this thing. Okay. So
Which
I
one?
said that, please, can the person on mute? I'm sorry, mute, sorry. I said that the reason why you are giving your gross turnover is so that you can know the category that the company fall into, whether the company is a small company, a medium company, or a large company. Who is that? No, you are not using actual year basis for any
They
of
mute your mic.
the two is David, the two is preceding year basis. The two with BBC is in changing accounting date. We don't use actual year basis at all. Thank you. Whoever told that person to mute the mic, because I didn't even know what I was looking for. Okay, so we have said computation of tax liability for the relevant years of assessment. I was explaining this one. So this turnover is the same thing as sales or revenue, be income. It's just money that the company earned for the period. Okay. So we said that the reason why it was given is to know whether the company is a small company, a large company, or a medium company. For the first year, the company is a what? Medium company. Second year, medium company. But in the last year, the company has met threshold for a large company. So the first 2 years, their company income tax rate will be 20%, while in the third year, the company income tax rate will be 30%. I hope you understand. Let's do the calculation, you understand better. So now, computation of let us write this name. Will you repeat the name too? Because we have to repeat the name because it carries mark. It carries mark. All these things you might see them as small, but they carry mark. Okay, so please don't just leave it like that, Sha. Ensure that you write the names. All these things, one mark can help you. I tell you. For 2020 year of assessment, now that's where we start from. For 2020 year of assessment, we already know our accessible profit. Accessible profit. Let's put our naira sign here and maybe here too. Okay. So how much is our accessible profit for 2020? This is it here. Abi, the one that we picked equals to this. That's our accessible profit. Do we have loss? No. What do we have? Capital allowance. Capital allowance. Balance brought forward. Do we have any balance brought forward? No. For the year, they already gave us capital allowance for the year, which is how much? 850,000. Our opinion finish here. Let's do it more. Let's make it go down now because I think it's a bit large. Okay. Allowance compared to this one. So, but like I said, I used to do is restriction 2/3 multiplied by AP. So we have equals to 2/3 multiplied by what? This figure. You don't need to bracket. Let's just see that it's very plenty. So we ignore and we pick what? The lower of the two. Relieved. How much will they relieve? Lower of the two is this figure. So it's going to be in brackets because we are removing it. So you put minus. Then we'll do the same for this one. Capital allowance that we are carrying forward to the next year is going to be what? 0, because we have relieved everything. Balance carried down. But for our taxable profits, is going to be this is our taxable income. Now for the tax liability for this particular year, we have company income tax, which is equal to 30% of what? Taxable income. Abi? That is equal to 30% multiplied by, this is our taxable income. Enter. Tertiary education tax, which is equal to, this particular year 2020, I think is still 2%. 2% of assessing. I'm intentionally writing this thing out to profits. I'm coming, please. I know your hand is up. I just want to finish this thing. Sorry, I had not put multiplied by. So total tax liability is this. You vote total tax. I think we have been told to ignore minimum tax, right? Okay, so we don't have to do minimum tax. So this is for 2020 year of assessment. Where did we see this figure? I guess I'll delete it. I don't know where the figure came from. Okay, so that is it for 2020. Now 2021 year of assessment. Let me answer your question before we continue. Who is raising up her hand? Abi's hand. Awa, you can speak.
Okay, ma. Please, ma, can you go back to the solution?
Okay.
Ma, please, I don't understand how you get that accessible profit of 25.
This one
Yes.
is what we calculated here. This one. That's the accessible profit.
Why, ma?
I already explained when we started the question that the format of this question is different than the normal format that CIT used to come. So in this question, they did not give us allowable expenses, the allowable expense they did not give us. What they gave us is what? Adjusted profits. And the format at which this question has come, the only way to get your accessible profit is by doing your basis period, which we have done. Do you get it?
Yes, ma.
So this forms your accessible profit for each year of assessment. And that's why we are using it as our accessible profit.
Okay, ma.
Thank you. So I know it's a bit confusing, but this kind of question is rare. It's in the past question. I saw it in the past question. And I don't even know. I just saw it and I just like copied it. I did not even try to read it or go through it. I'm happy that I took it, because in case if you meet something like this in the future, you now know how to do it. Right? So I think I other question. So
Yes.
Sally, I will put
That
down your
capital allowance. Is it
Eh?
given in the question?
Which one? What was given in the question? Yes, now here it is in the question. It's here now. Capital
Yes.
allowance. It's in the question. Wilfred.
Yes. Well, I think we calculate CIT for 30%, but in 2020, the gross turnover of the company was less than 100 this thing, million.
That's true. Thank you so much for reminding me. I forgot. Those are the
Okay.
small, small mistakes that you can make in the exam. Please be very careful. Be very careful. Even though the fact that I knew it and I explained it to you, I still made the mistake. Can you see how it can be? So you have to be very, very careful. Okay, so I think I've answered everybody. Please, accessible profit for 2020. How did we prorate it? For 2020, share this one. No, we did workings here. Old date and new dates. So are you talking about this new dates that we picked? We use okay, maybe for the new date. The year that this first one covers is November 2018 to October 2019. But since we have nothing to do with 2018, we only pick the months that are in 2019 that are in this particular period, which is January to October. We have January 2019 to October 2019 in this place, and that is 10 months. So you do 10 over 12 of this particular money, 10 over 12 of 24,500. 10 over 12 of 24,500. Then the remaining 2 months is in this next one. That is what November and December 2019 is in this particular one. Then you now do 2 over 14 of this. Then you add it to what you got from above when we did 10 over what? Over 12. If you check this place, you will see the okay, I think it's there. See it, see the formula up here. 10 over 12 of 24,500 plus 2 over 14 of what? 38,200. So are you good now? Do you get it? All right. I think we can proceed. Hey, my battery. Let's quickly finish you. Okay. So that's for 2020 year of assessment. Now for 2021, we have accessible profit. Let's go and equal to. We have it already. We just need to go and pick it. Is here. So now we don't have loss, but we have what? Let me just copy this capital allowance. I should not write it again. Copy this. Okay. We have capital allowance. Do we have any brought forward? No. We do not have any brought forward, but we have for the year, which is this one, 720,000, 720,000 naira. Are we good? So we have total
Yes.
capital allowance to be what? 720,000 naira. Then let's check our restriction. Restriction. Abi? Restriction equals to 2 over 3 multiplied by our accessible profits. Do we have it? But because restriction is higher, we are using our what? Our total capital allowance. So the one we are relieving is going to be equals to what? Our total capital allowance. And that's what we remove from our what? Our profit as well. So it means that the balance that we are going to be taking to the following year is going to be 0. This is going to be what? Balance carried down, which is going to be what? 0. But for our taxable income, we are going to have this figure. This is our taxable income. Just need to remove the capital allowance from the what? The accessible profit. We have total profits or taxable profits. The income, then we can write anything. Please, are we good?
Yes.
Okay. So then we calculate the tax liability. Tax liabilities. Company income tax. We are still going to be using 20% because the company is still of
Yeah.
what? Taxable income, which is what? Equals to 20% multiplied by this figure. Then we have TET. In 2021, I think TET is already 2.5. Of is somebody speaking? Whoever that is should mute them, please. So we have our
Please, do you have
total
a table
tax
for this this stat?
table as out.
Like the knowing that this year we are supposed to use it, we are supposed to use it this year.
I don't get you.
Like you said 2020 you use 2%, 2021 you're using 2.5. So is there a table where you know that this is what you're supposed to use this year?
There's no table, but I think I wrote it out in the last class.
Okay,
So perhaps
okay.
you were not in the last class, I guess.
Yes, I was not.
I wrote it out in the last class. So can somebody help me type it in the chat box for her so she can get it to her? We wrote the date and the rate applicable. It's because
After
of
this
the
class, I'll go back.
Please,
okay.
on the WhatsApp
Can get it.
platform.
So these are our tax for the year now. These are our tax for the year. So for the last year, 2022 year of assessment, 2022 year of assessment. So we have, let's just copy this. Copy this. What is going to be our accessible profits is here. Enter.
44,100.
So for balance buffer capital allowance is 0 because we leave everything. For the year is this 600 that is there. Abi? Stop has finished. I'm coming. Oh, I know you guys would have question. Okay. So we have our total capital allowance to be this. Restriction. We are restricting to what? 2/3 multiplied by our accessible
profits.
Is bigger, of course. So the one we are relieving is the smaller of the two, which is this one. Same thing as this.
Smaller of the two.
So our capital allowance carried down will be equal to 0. Close it. But for our taxable profit, equal to this amount. So tax liability.
30%. Okay, CIT.
Yes. CIT here is going to be what?
30%
of taxable
profit.
Which is equal to 30% multiplied by our taxable profit. Then TET in 2022, I think it's still 2.5 now. It's 2023 that it became 3%. So we have 2.5 equals to 2.5% of what?
Accessible profit.
Okay. So we have our total tax to be this. Guys, are we good?
Yes, we are good. Please, I want to talk on the restriction. You said the lower of what?
Lower of the restricted amount and the total capital allowance.
Okay, any of them that is lower is what you are going to expense.
Yes, it's what we are going to relieve from.
Relieve.
Yes. Okay, so Emmanuel, your Adeolu, your hand is up.
Yes,
Taxable income and profit. I'm coming, please. Oh yeah, Emmanuel, you can speak.
Yeah, my question is, that 2021 year of assessment, I thought the TET is supposed to be 2%.
It's supposed to be
2%. The TET, that's area percent tax.
2021.
Yeah.
Let me check my notes. I thought the Kini is 2021. 2.5 is from 2021.
Yes, 2.5 for 20. I thought it's supposed to be 2% because based on the basis period we did for the 2021, the new account is from 1/1/2020 to 31/3/2020. So I
2.5
thought
is from January 1, 2022.
yes.
January 1, 2022.
So I thought this 2021 year of assessment should be 2%.
Oh, that's true. It's 2%. Oh, it's 2%. You are right. Thank you. I went to go and check it now. Okay. So from January 1, 2022 to September 1, 2023 is 2.5%. Which is where this one, I'm trying to see. Oh, even this one is still 2%. This 2022 year of assessment is still 2%. It did not fall under 2.5. January 1, 2022. So it's still 2%. Assuming there's light, I will have snapped this thing and put it on our WhatsApp. But let me see if my phone will bring flash. And let me snap it to you guys on WhatsApp.
Twenty 2022 is 2.5.
Okay. So are we good? Any other question? What's the difference between taxable income and accessible profit? So for your taxable income, that is one that the tax is based on, like that's how you call it taxable. That's our tax base that we are calculating our tax on. But for our accessible profit is how can I put this? Our adjusted profits before we consider capital allowance. Adjusted profit before consideration of capital allowance. Though there's a bit of a argument on that one because some people consider loss relief before accessible profit, while some people does not consider loss relief. Personally, I was taught to consider loss relief, but in the ICANN pack now, as you can see in the format, they do not consider loss relief. They use adjusted profit as accessible profit. So I recommend that you just follow the pack, Sha. So Maureen, your hand is up. I've sent to the WhatsApp group.
I didn't get the explanation, the years for the tertiary education tax. Because I was thinking 2019 to 2021 is 2%, and then 2022 2.5, and then 2023
Check the
2%.
WhatsApp chat. I just sent an image to the WhatsApp chat. That's my thoughts.
Okay, ma'am. Okay, ma'am.
So
Thank you.
that will make you understand it better.
Thank you, ma'am.
You're welcome. I think this is where we call it a day. Let me see if I have any assignment for you guys, but I don't think so. You guys should be able to do. Okay. Assignment what? Do this one. Oh.
We gave
Number
us
2.
assignment already.
We see tomorrow. No, tomorrow. Do it, but before we see tomorrow. Shade Adu Limited.
Gave us Shade Limited. Assignment on Shade Limited. Oh.
I don't understand what you are saying. Well, I guess she's no longer speaking. Okay. So you can attempt it, Sha. Attempt it. If you guys don't attempt it,
Can you help snap it to send it to the group?
I'm not slapping it. You guys go and pay for your material. You want to be able to come and remove my head. You guys should go and pay for your material and take assignments.
Don't have money.
Wait, how
don't
much
have
is
money.
4,000 naira? How much is 4,000 naira? So you just attempt it. If there's time, we'll do the correction next class. But tomorrow we are going to be taking a new topic. We're going to be taking a new topic, okay? So this one has it has capital allowance. It has capital allowance in it. It has capital allowance. So
It's plenty.
eh?
It's plenty.
It's plenty, yeah. That's why I say you should do it as assignment. Okay, but it's actually simple. We just need you to calm down. Okay, I think that's it. See you guys tomorrow. I'm very, very tired. Do my assignment too. All right, bye.